Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein of Linn and Associates with your weekly metals market update. And that's right, it's Friday, September 9th, 2017, so we're going to do the weekly. And admittedly, it's only about 3:10 in the afternoon, but you'll get an idea of where we're at because you can see how the market's finished. Now, on the weekly update, what I do is I first look at the monthly chart to just get a big picture. And from that monthly chart, we take a look at the weekly charts. During the week, Monday through Thursday, as you know, I do the daily chart. And then I start off with a weekly chart. So I give you a span of everything that's going on. We know that the market's still feeling the wrath of North Korea. What can they or will they do tomorrow on Saturday as we have Founding Day and they may want to set off another missile? We'll find out if that's even important or not. You know, these things don't have a long duration. The stock market's been under pressure, which has helped this market. But the biggest ally of the gold market and the silver market has been the falling dollar. And the dollar got under 91 today as an index, while you got up to the nearly 121 in the euro. The British pound is up sharply here to the 132s. Most currencies are up against the U.S. dollar. Now, that was part of the president's original goal, if you'll recall. When he took office, and part of his campaign was the dollar was unfairly valued, too strong against a number of currencies, and it's really taken a hit ever since then. So while people don't want to say anything, and it may be for all the wrong reasons the dollar is down, and that impacts the metal markets. I don't know what to expect on metals from Hurricane Irma. What does it do to the copper market, for example, which collapsed today, down 10.5 cents? So yes, it ground higher. It took back a monster amount of those gains in one swoop. And not off of bad news today. If you looked at the Chinese import data, they were up 11% year-over-year basis for a month like this. So I don't understand, other than the market needed an excuse somewhere to take some money off the table. Now, when we look at a monthly chart, we get a long-term picture. In June, I wrote a gold report based on this, and then I followed it up in the summer with another report, and I said, overall, this market still looks like it might make a run higher, and I haven't changed my opinion. The 1376 level is still very much a target. That's the upper Bollinger Band. The green line on the chart is the 100-month moving average of closes. That number is 1330.10. You're over it. So the very next resistance point is the upper Bollinger Band, should the market want to reach there. The market has fought a battle in all of 2017 to have an upside bias. Now, if you go back and you look at how much gold is up on the year, and you start looking at it on month by month, if you look at the red line, that's the 18-month moving average of closes. Through 2017, it has had a son of a gun time in having any month where it closed under that number. Sometimes the monthly chart's a little storyteller. When we come to the weekly area chart of closes, you can see how the market has been in an upthrust. Since 1209.70, right literally at the beginning of July, it has been able to rally about $135 an ounce. When we look at a weekly bar, you can see how the market's been in this upside spurt, and it is, unlike the monthly chart, it's had a pattern of higher lows, see the dark arrows pointing up, and certainly you can see the higher highs. That's bullish in the market. The market has been over the 18-week moving average of closes, bullish in the market. The market is over the upper Bollinger Band. If you look at last week, the market closed 1326.60 over the 1315.20 area. So you've got 2 weeks in a row now where you're over that number. 5% of the time, the market will trade over or under a Bollinger Band, even if it's a weekly chart. Therefore, the odds are that 3% of the time left, the market, in other words, 97% chance next week that the market will come back under the Bollinger Band. That's not 100%. If it stays over it, then the next week you have only a 98, you have a 2% chance of staying over it, 98% you won't. So this market's getting a bit ahead of itself, but we've known that, and we knew that in order for the trend to kick up at some point, to come out of this sideways action, you got to push on the Bollinger Band. You did it here to the downside. You had something like that, not the exact pattern, but something similar in the sideways action. Then it began pushing, and then, as you can see, it finally got backed onto or to the right-hand side of that Bollinger Band. I'm expecting similar type action. That's all that I'm saying. In momentum, the market is still pushing to the upside. So I have bias up, trend up as measured by the swing line, and momentum pointing up. Yet the market is ahead of itself because it's over the upper Bollinger Band. In the silver market, all you've done is come up to the upper Bollinger Band, and you literally stopped right against it. That number's 1805.5. You're going to finish around the 1800 level. So you've gone from the lower band now to the higher band, and you've done that since July in a similar manner. The trend here is up. You've got higher lows, higher highs. The bias is up because you're over the 18-week moving average of closes. Momentum's up. And you might get what's called a long-term bullish crossover where the 18-week moving average gets over the green line, the 100-week moving average of closes. Got it? So market's getting to an interesting spot here, but it can lolly-dolly against that a little while. So don't get overly excited the way you do on daily crossovers. In the copper market, the market stretched itself all the way here and finally came back on the weekly chart into the Bollinger Band. Momentum is going to try to turn down here. Be a bit careful. It takes a little longer on a weekly chart than a daily chart, but if the momentum crosses under 80, the odds favor that the market's going to get a deeper correction that you're seeing right now. In the platinum market, like in the gold and the silver, the market bottomed out in July. You began a pattern of higher lows, higher highs over the 18-week moving average, got to the upper Bollinger Band, fell back to that 100-week average, and has now been able to pursue higher prices, but it too is staying to the right-hand side. Look at that close, 10-11-10 of the upper Bollinger Band, which is 10-14-30. There's nothing bearish in these metals. Even copper, it's a correction. It's not necessarily the beginning of a bear trend. In the palladium market, you can see that this market also has had its run. Now, it's knocking on the door of a couple of things. Number one, it's knocking on the door of trying to get under the previous week's low of 926.60. It is $8 away. That's not that far. Momentum has flipped on you. It's turned to the downside. You see the difference here in the platinum? Hasn't done that. You might do it in the copper. You haven't done it in the silver, and you haven't done it in the gold. So that's how I look at what the momentum is doing. In the dollar, this is supportive of the metals. Look at how this market's just staying in a downtrend. It's locked into a downtrend as well. The momentum here is still pointing to the downside. It is not turned up. It is just staying under a 20 level and locked in. Still very bearish. Goes down, challenges the Bollinger Bands, moves to the right-hand side, and then falls back. It seems to have been the pattern that the market has been doing. You know, there's a publication, now I've got the October issue I want to show you, by the way, called Modern Trader. And if you go to their website, and you should go to their website, you will see that you can get this yearly subscription for one magazine a month and or their daily written updates, $79. Through us, it's free. This gives you an idea of what's covered this time in the magazine, and it is something for futures traders, derivative traders, FX traders, name it. It's all in here. You'll discover the bearish patterns, bullish patterns, ideas that they talk about, trends that are going on in the market. Then you get these articles with great graphics teaching you chart patterns as well as ideas on fundamentals, trading weather-driven markets. How do you play those? Hurricane Irma, could that be one that you're looking at right now? And this is what their daily market focus looks like, and that covers the day-to-day topics. To get it, either call us, go to our website, you'll see a carousel of free offers. You'll see that circle right when you go to the website. You can click up here if you're looking at us on YouTube. There'll be an icon, or underneath us you will see that it says click here for Ira's free offers. Do so, and we'll put this in your pocket. I'm Ira Epstein. You have a good day, and I will see you all Monday.